So, as you know, I'm an economist, so I will try to bring some economics flavor on it, and I will try to go through this time together with you and try to understand where we stand and what are the challenges that can block or prevent the proliferation and the widespread adoption of blockchain systems in the years to come. And then it's just more a part of a research and a survey that I have conducted with one of my team at the University College London, and I would like to share with you. And the survey will be published in the Journal of Digital Banking in the next month or soon, anyway. So, well, if you are all here, we do agree that the question is not if, but is how. So, and let me start with this bold statement. Let's read it together. So, why the Bitcoin hype cycle has gone quiet? They say Silicon Valley and the Wall Street are betting that the underlying technology behind it, the blockchain, can change, well, everything. And this is an even bolder statement if you think that has been said by Goldman Sachs already back 2015. So, it's true, indeed. I was a central banker a few years ago. I did work for the German central bank, Deutsche Bundesbank, for almost 3 years. And I did set up a team, I was in the research department, and I did set up a team on peer-to-peer finance. I did look at the peer-to-peer lending, crowdfunding, a little bit of digital currencies. But then I realized, together with this bunch of guys, that blockchain can change well everything. So I moved back to academia. That allowed me to explore the different opportunities and possibilities of adoption of this technology. So that's I think is the amazing part. And if we look at the trend in Google Trend, you know, Google Trend is targeting always the maximum as 100. And as a reference point, and you see is increasing over time. This is from January 2017. So this means that the spike there, January 2017, means that the highest Google search for the words blockchain was in January. Consider all the history back to January 2014. So it's an increase in demand and attention from the community, from the audience, for the general public. And we see this reflected also in the price, in the exchange rate of the digital currencies. This is a tree which is growing. So we have global interest from many countries all over the world, 25 plus projects from China, Russia, and Europe, of course, Emirates and other interesting countries like Australia. We have more than 3,000 patents. This is the so-called mindshare. So this gives us basically an understanding of the forecast of what will be the further development in the years to come. And when these 3,000 patents will materialize in commercial products. That's really a lot. Then we have 90 plus central banks working on blockchain, which is interesting. But the central banks, of course, they have a limited mandate. So they look at the blockchain mostly for two reasons. Mostly as a technology that help to streamline the payment processes, and secondly, from a monetary perspective. So they may introduce a digital version of their fiat currency in order to add an additional tool for macroeconomic policy or monetary policy in order to, for example, go below the zero low bound problem that they have when they need to boost the economy with the injection of liquidity, and they have this problem that they don't know what to do in that cases. So there are a lot of projects. Also, the University College, we are supporting the Bank of England. We have a protocol called RS Coin, which has been developed by George Tanezins and Sarah McLeod some years ago with the collaboration with Rob Ali, that now is at the MIT, was a former member of the digital currency group at the Bank of England. So venture capital, so a lot of investments. So this thing is updated, so there is a lot of cash flow going into the blockchain space. Banks predict to initiate some projects around blockchain during 2017, so the 80% of the largest bank. And this is reflected in the proliferation of consortia. So R3 just announced at Consensus that they raised more than $100 million, so which is quite a lot. But there are consortia well beyond finance. So there are consortia in insurance. There are consortia in construction, in a building. So we have promoted at the University College a new consortium for constructors in order to coordinate their activities, especially for large projects. So that's the situation. And given the current situation, I would like to share with you some challenges, and would like to trigger you and with some ideas and food for thought for challenges. So during these studies that I'm going to present, we have identified basically 3 types of challenges. So we have the legal challenges, technical challenges, and the business challenges. And we try to list all of them and then to group them in categories, and then to go to send a survey to experts, to people with knowledge about blockchain. So lawyers, academics, software developers, engineers, regulators, policymakers. So from different groups, and we try to ask some questions that I will show the answer later on. So, however, by doing this exercise, we observe that there are some challenges that are, so to say, multidimensional challenges. So that are basically across these 3 different groups, and let's try to see which one they are. So the first multidimensional challenge is the underdeveloped ecosystem. Basically, what I mean by that is that we don't really need, it's not really sufficient. It's necessary, but it's not really sufficient to have a technology development of different blockchains. We need to have basically an ecosystem of players, so software developers, but also startups, incubators, accelerators that promote the blockchain development of those startups. We need to have a research institute that focus on specific questions about blockchain, not only from a technical point of view, but also from a legal point of view, or from an economic point of view. We need to have basically then a community of end users. So if you think about how many of us use cryptocurrency during our days, only few of us, if not none of us, use cryptocurrency all day long, every day. So we need users, we need communities, we need merchants that adopt this type of new technologies and start from the cryptocurrency and then shift toward more complex projects. Supply chain management can be one big project, and so on. But we need to start from the beginning. So that's what I mean by ecosystem. So what is lacking at the moment that I don't see in the community is an ecosystem. Some countries are trying to move toward this. There are some initiatives, for example, in Switzerland. They are going to promote a new law, fintech kind of license, which allow, I think, is a 300,000 as a capital requirement to open up a kind of a bank. And this is basically together with other tools that they want to promote basically the use of these new technologies, not only blockchain but also other new technologies in the finance space. So there are some countries where you have a regulatory intervention from the regulators, or even from a politician with specific laws. So, but this is too little. This is too little at the moment. So we need more about that. We need more coordinations. It's not sufficient that the city allowed to pay with a Bitcoin at the ATM machine, or to withdraw, or to pay with a train ticket. We need more structured, long-term view about the problem. Okay, this is the first challenge. The second multidimensional challenge is the lack of educated individuals. If you look around, I'm working at the university. I'm approached every day by HR company. They are looking for people to recruit. They don't find people. They ask us to help them to, and we don't have, because even at the university, students are not programs. They're not dedicated programs for blockchain. There are programs for many quantitative discipline, big data analytics. I don't know. High frequency trading, or I don't know, high frequency econometrics, or I don't know, cryptography, and so on. But there is no much programs that combine all of them and put together in a so-called blockchain programs. And there are some universities that do that. There are some online courses on fintech, but not much on blockchain specifically. And if you look at the software developers, according to a result of my report back to 2015, it was around 5,000. And this number pale compared to the Java developer, 9 million, 10 million, I guess now they are. And to the whole almost 20 million of software developers that we have at the moment, 2017. These figures are going to change, so the trend is improving a lot. So we have a lot of demand also from our students to create educational program dedicated to blockchain. So, and there are some students that self-educate and that they do learn by themselves how to code in Solidity and other languages, and how to program a smart contract by themselves. So according to Bloomberg, these 5,000 developers back to mid-2016, they're going to grow almost to 100,000 this year, the next year. And on the other side, we have the lack of education from executives. So this is the other side of the coin, because usually in the big corporations, the executives are the decision makers. They are the people that sign the checks. And sometimes they don't know much about blockchain. They are scary about these new technologies, and they are basically not willing to invest if they don't have clear in mind if they have a return on investment in few years. So educational programs also for C executives is very important. I have some statistics from State Street Corporation that say that 48% of the asset owners, they don't know what blockchain is, and 78% of the asset managers, they would like to have more education about that. So we need to do a lot of work also on these challenges. The third and last multidimensional challenges is the lack of standards. I know that maybe also some of you in the audience are not in favor of having blockchain standards, but as any other technology in our life, we need standards. And standards indeed can come out by basically de facto by market adoption, or can be promoted by consortium like R3. They are pulling together 70 plus companies, banks, so they can set up some standards within that group, as was for Swift when it was created in the past, or they can be promoted by the international organization. So the ISO standards, so they have decided to open up the standards for this. And the standards can be on technology, on platform, and on the business processes. So the topic that we are looking at the ISO standards. I'm part of the ISO standards working group on blockchain technologies. So we have set up 5 different working groups, one on terminology, taxonomy, and ontology, which is tremendously important. If you look around the blockchain, I'm working on blockchain. I'm not working every day on the technical aspect of the blockchain, but anyway, I'm looking very closely at the blockchain landscape, and for me is a jungle. It's very, very difficult to understand what is going on. I'm giving talk almost every week around the world, and I need to change my presentation almost every week because the situation is changing every day. So, given this jungle, we don't have a guide map, we don't have a roadmap, we don't have an ontology which allow basically us to understand what is the software architecture we need to use if we want to start from scratch to build a blockchain system. And this is tremendously important. I'm stressing on this because I have a work that I've been doing during the last months on this, and it will be put online today or tomorrow about the ontology of blockchain. Basically, by that I mean we unbundle the blockchain in components, in main components and sub-components, and we try to understand the relationships and the different layouts that are out there. So the different options that are out there, from consensus mechanisms, from the type of agreement, from security aspects, privacy. We look at the different aspects like transaction scalability, and so on. Security and privacy is the other working group. Identity, smart contract, and use cases. These 5 working groups are the working group that ISO standards are going to work in the next 3 to 5 years in order to set the standards. Standard, we bring network effects, interoperability, of course, because if we use the same standards, we can easily exchange information. We lower the risk for a chief executive to invest in these technologies because they are not alone. They are sharing the risk with the other members in the community, and share platform, basically. So let's go now to the technical challenges, and let's try to go quickly to give a summary of what are the challenges that we identify. I will not have much time, unfortunately, to focus on all of them, so I need to little bit hurry up. So we need to understand that blockchain is a foundational technology. So we have if we group them according to the level of innovation, we have a surface technology that bring basically is a new remake of already existing products. So we have what they call genuine technology, when you bring a new product or a new service within the same technological framework, and then you have a foundational technology when you basically present a new platform. So, and blockchain basically is part of this foundational technology. If blockchain is part of these foundational technologies, this means that it will take years, it will take decades to develop in products and services. So it's not very easy to have a product out of that. So this can be a comparison now where we stand back to the 1995 when the Java Virtual Machine was introduced and allow any application written in Java program language to run on any type of operating system or hardware. The same comparison can be with the Ethereum Virtual Machine, and the language can be Solidity. Can run any application dependent on the computer architecture. But we are very at the beginning of this journey. So other technical challenges, basically, as I mentioned, there are the lack of a killer app. The most important killer app is Bitcoin, basically, with 20 billion market capitalizations. Ethereum and Ripple, these are the killer app. We don't have basically use cases which capitalize such a big amount. We have a lack of middleware and software development tools. Basically, the lack of what we can call software glue that allow basically the web developer or the app developer to build their own app without basically carrying over the much of the interlink with the operating system or the operating infrastructure, backend infrastructure. So when the Netscape application was introduced in the market, so it was a revolution for the web application, because it allowed basically to create a suite of software capabilities that allow basically the people to concentrate, to focus on the web applications. And we are not yet there with the blockchain, so we need this type of tools. We need this development of this type of softwares. Scalability. I don't go through all the problems about scalability, but in the decentralized system, there is a trade-off between the performance and the security, and on one side, and the centralization on the other side. the two of them that do not talk to each other, so you need to find a compromise. And here you have in the blockchain space, we have different stakeholders. They have different interests. That's what is basically an endless story. And it's also a moving target. If you think about the internet, we are going to aim at 50 billion nodes by 2020, and they are also scaling up. And the problem of scalability will stay with us on the blockchain space for many years, if not forever. Privacy and security, basically most of the blockchain are open, like in the Bitcoin, so in somehow you can infer the users or the interaction between the users. There are some technologies that can allow you to do so. You can basically obscure the transaction with some tools like CoinJoin or ring signature or state address. That can be possible, but these are add-on applications. Moreover, the other problem about security is that most of the agreements are probabilistic. So, and if you talk about these probabilistic type of agreements to firms, to corporations, they don't like this. They like deterministic agreements. That's why they prefer to use maybe Corda, which is blockchain inspired, instead of Bitcoin. And this is a part of a study that I did back to 2016 about how you can uncover basically the flow of transaction between entities in the Bitcoin space. So it's not really anonymous. You can you don't see here, but you have some names. So this is BitPay, this is BTC, Bitstamp, Bitfinex. We traced their transaction over the period of 6 years, and we were able to basically understand who were trading with whom. And also we have a lot, of course, of Silk Road over there, or Darknet marketplace. So this problem of the privacy basically is a problem for public blockchain. Then there is a trade-off about database. Of course, do we need a blockchain or do we need a relational database? So the choice maybe from some company like Corda, as I mentioned, can be for certain specific business reason can be the case, can be the options to choose. And the legacy system is another problem, basically how to interact with the older legacy systems, how to build the glue infrastructure that allowed basically the blockchain to talk with the old infrastructure. And then let's go quickly to the business challenges. So in terms of business challenges, let me mention that we have a problem on how to move the assets from the real world to the on-chain, to the online world, to the digital world. So it's not yet clear. There are some solutions on the market, but all of them are far from being optimal. There are many problems. Maybe the best solution is to digitize, basically, to create a new digital version of the real assets, and to create from scratch a parallel type of markets on chain with respect to the off-chain markets. We have the other problem, which is the critical mass. So we need millions of users, and of course, as I mentioned before, we are far from there. I think we have around 100,000 merchants that are accepting blockchain, or a little bit more, but this is not enough. It's funny that maybe some of you remember the experiment conducted at MIT. They gave an equivalent of $100 to all bachelors, and only in a Bitcoin, and only the 30% of them sign up to get this $100. So even for those type of educated community, Bitcoin was not a choice. So we are far from that option. If we look at these metrics, basically, we are basically, if we want to move from a single use case like a Bitcoin payment to the transformation phase, which is the upper right quadrant, then we need to have a huge degree of novelty and a huge degree of market penetration, a huge amount of users. And at the moment, for what I see, we are more or less still here. So we need to move up to the substitution level and then to the transformation level. And this takes years, decades. Because you need to introduce in the market a lot of new infrastructures, and you need a coordination with different players. So if you think about, for example, supply chain, or if you think about even the widespread use of smart contracts in finance, you need a coordination between end users, financial intermediaries, regulators that need to take part of the chain and use smart contracts. So. Well, these are basically the source of funding. Venture capital. I mentioned the venture capitals before. I think it's interesting to also spend a few words on the ICO. So the first, so we moved from the proof of burn back to 2013 with Mastercoin, and then which raised $5 million US, was not bad. It was the first one, and then we moved to the DAO, which was a kind of a proof of burn. Or the first ICO, they raised 150 million US dollar, was the huge crowdfunding campaign in the history, and it was also the fastest to collapse. After a few weeks, the DAO collapsed. Now we have a new type of funding, and this is interesting for venture capital firms because they want to liquidate, their investments before the initial public offering. So before 3-4 years, so they can, with the ICO, shrink this time of return to capital. So there is an interest not only from the blockchain community but also from the investment community to this new type of investment opportunity. Well. Specifically about the challenges, there are of course a lot of volatility. There is a lot of still no killer app, and the quality of the projects are not sometimes very convincing. So and if you mix the quality of the startups, which turn to fail the 98%, 95-98% within 3 years, and if you mix this with the flow from the capital markets, that can bring some concern. So I let you with these final slides, which is about the legal challenges. So we need some policy intervention from a early bird view. So as I said at the beginning, so we need a policymaker, and then we need intervention, and then we need intervention from regulators. Thank you.
All right. Thank you so very much. Thank you. That was a very interesting discussion. I'm sure we have some questions in the audience. So anybody? Please, any questions?
Can we put also this one?
The what?
Can you put also this one on the screen that you can?
Can we have the slides on the screen, please? Thank you. Very good. Any question? Yeah, there's one question at the front here.
Меня зовут Юлия, у меня очень простой вопрос. Во-первых,
I'm Julia. I have a very simple question. Which university do you work for, and what are the coordinates?
How can they get in touch? What are your coordinates?
Okay. So I'm working from the University College London, and I'm the founder and director of the Center for Blockchain Technologies that we have there. We have around 80 research fellows from all over the world, from technologists, economists, lawyers, even regulators that are affiliated to our center. And we have the largest student division in the world, which counts almost 600 students interested in blockchain, from bachelor to PhDs. But as I mentioned at the beginning, there is a lot of work to do to educate the students. So we have good premises, but a lot of work we need to be done.
Okay. Any more questions? There was one more here somewhere. Yeah, there's one over there.
Hi. You mentioned I think a project of using blockchain to kind of coordinate the work of constructors.
Yeah.
I don't know if you can talk about it a bit more, if possible. And in general, what do you think about the perspective of large-scale infrastructure, public infrastructure, being sort of crowdfunded in the future, and how could blockchain enable such processes? If you think from a financial and economic perspective, whether it is a conceivable, even if far-fetched future, and what would be the possibility of this scenario?
Yeah, so the consortium of for constructors that has been set up promoted by the university college is because there is the largest concentration of constructors in London in the whole Europe, and by constructors I mean constructors that build complex architectural infrastructures like airports or if you go to the stadium. So if you think there is in the chain of the process for these large infrastructures, you need the interconnection, interrelation between different stakeholders. You have different contracts between them, different provisions, different convenience, different deadlines, a lot of flow of money that go from one party to the other, and a lot of also exchange of information between them based on which the agreements are triggered or not. So for them it's important to have a reliable system which is independent, which allow them to determine the truth, what happened and when. And sometimes it's not like that now. Basically, there are a lot of conflict between the different parties because maybe the deadline in the agreement is not clear, and they need to go to the court or to the arbitrator to understand if the deadline was over or not. And there are collateral pledge on the agreements. So for large construction that can account on billions of dollars, collaterals are very, very expensive, so they want to streamline these processes. And the blockchain, they are looking at blockchain as a technology solution. So going to your last questions, basically, I think yes. I mean, I think we may observe in the years to come an evolution with respect to the funding model, and the technology can help a lot. There is, as I mentioned, there is an interest even from the investment community to shrink the time of return to capital of their investments, which usually takes a few years, 5 up to 10 for complex investments. So they want to shrink this. So and if there is a way to monetize this investment before in IPO, before acquisitions, they are interested to do so. Technology like digital currencies that allow basically to convert back their investments to fiat currencies and to reinvest maybe in other investment opportunities in the meantime is a holy grail for them. Therefore, I think also for larger projects, large infrastructure that can be developing also in that direction.
All right, thank you so much. I think there was one more question I saw. Somewhere, yeah, there's one on the right there.
Paolo, how do you think, from the technology adoption curve, life cycle point of view, is blockchain on the hype part, or it's already in the past and we are in the productivity?
We are in the transition phase. We are not in the hype, I think, from the technological point of view. We are in a transition phase of uncertainty, where we observe the proliferation of different blockchain technologies. We can call blockchain technologies, and we don't have yet a clear understanding what will be the technology that will dominate the market. And will be the infrastructure for the to go to the next wave of a level of applications. Because if you think the development of the internet started back to the 70s, and with the TCP/IP, it was used firstly with the email exchange at the ARPANET, and then it took a lot of years to develop and to develop widespread. And after the development, new type of application was built on the top of the internet. A new type of business model was built on the top of internet. Now we have tech giants that which they are basically turnover or their their market capitalization inherently depend on the internet, like Facebook, Airbnb, and so on. So if we look at from the technological point of view, blockchain is at the uncertainty level. So we don't have yet a clear path where we are going to be in the next 5-10 years. So there are many technologies, competitors also of the Ethereum, which is well known, but there is not only Ethereum, there are other technologies that have some additional features that are more interesting. And I think that in this respect, we need to wait a little bit in order to go to a mature phase.
And what I have a question for you as well. So we talked today a lot about also the fact that yes, internet technology before were developing, and then we had the dot-com bubble, right? And we talked today that with the ICOs and also with the cryptocurrencies, we might see a bubble, right? If that happens, when that happens, how do you think it will affect the market, and what will come out on the other side?
Well, I mean, we already had the first wave of blockchain development with the cryptocurrencies. So, so we already had a lot of problems with the empty gox. Was I think almost or around $500 million lost from hundreds of thousands of customers, if not millions, from all over the world, and I was one of them. And there was we had a problem recently with the Bitfinex. So I think it is inevitable to have some failures in this phase. I don't think we will have a dot-com bubble because the first wave of blockchain development is already over. Now the second generation of, let's say, entrepreneurs are more mature. They learn from their mistakes in the past, and the regulators are looking at the matter more closely. So we have more information also from a regulatory point of view. So I think we will not have kind of a dot-com bubble, at least not now, because of the ICO.
Thank you. Any more questions from the audience, Paolo? Yeah, there's one in the back.
I have one question. You are speaking about legal market. What about the illegal market? Is there any way to prevent the use of blockchain in underground market like Silk Road, and they are using it in a legal way? Is there any research going on in this field to make it more secure?
Yes. I'm also conducting some research on this. Basically, it is possible to have some tools that allow the policy enforcement to have a track of the transactions in the darknet, but we are far from the identification to the real identifications, because the technologies can be, the blockchain, if you use it for the darknet, you can mask your IP, you can use different type of tools like CoinJoin on Tumblr services, or other tools that can obscure the recipients and the senders. So I don't have any opinion about the use of this technology on the darknet, because the technology is agnostic, so you can use for good or the bad things. So it's inevitable. We cannot change this, and we cannot prevent this. So it will remain with us forever. So it's impossible to prevent the use of digital currencies for this. Monero is one currency that increased 2,000% during the last year, because it basically is going to replace Bitcoin in the darknet. So you look at the Bitcoin, you did a lot of research on Bitcoin, but then people start to look at the other currencies, other tools, blockchain-based, to conduct the same activities. So it's a moving target also as well.
All right. One more right here, third row. Microphone is being delivered to you in about 3 seconds.
Hello, my name is Leonid. I have a question. You said nothing about mining. What's your opinion about future of this area? Yeah, mining.
Okay.
Thanks.
So in the research that I did, you can find online, I published in September 2015, I did some study on mining activities and only on Bitcoin. So what we observed there is a concentration on the market. It's a huge concentration on the market. That I think the 70–80% of the market is controlled by the 3–4 mining pools. And back to that time, the statistics was from 2012 to 2015. We saw that some mining pool passed the barrier of the 51% Sybil attack many times during that window. Gash.io is a Chinese mining pool, touched that barrier very often. The problem was at that time that the community started to be worried about and started to write in the blogs and in the thread about this risk of having such a powerful mining pool. And therefore there was a sort of self-regulation by the Gash.io. They released a press release when they say, we try to limit ourselves and to block the size of our mining pool, and this is what they did. In fact, if you look at the statistics, Gash.io reduced their market shares in the competition between mining pools, but still they are very large. We don't have regulators there. It's a far west. So mining pools can indeed do whatever they want. If they are benevolent, they can act like Gash.io did. They can reduce their market share in order to allow others to compete with them. But is a real problem, especially if we talk about scalability. If we increase the size of the block, this somehow favor the concentration on the mining side.
All right, thank you. Do we have any more? I have one for you that is a very theoretical one. Sometimes I like to think about crazy ideas, and we had one with my friend the other day. So we were talking about cryptocurrencies and economy. And we thought, what if a country would introduce a cryptocurrency that would, I'm asking you as an economist, as would self-depreciate if you don't use it, right? So if it sits in a bank account and you don't use it, you don't invest it, or you don't put it anywhere, it starts losing value. And by that way, it would enforce people to invest more, to spend more, and hence improve the economy. Would something like that work, in your opinion, as an economist?
Well, depends, because if you think about you have a Bitcoin, the most of the Bitcoin is not in transactions every day. So we have an increasing amount of value of Bitcoin. We have 40 billions, and we have around 350 transactions per day in Bitcoin, which is equivalent around to 130 million transactions per year. This figure is paling compared to the global market payment, which is 411 trillions per year. So, but Bitcoin, why is that? Bitcoin is kept in hoarding, so it's kept in the bank account, as you say. So it's a kind of so it's not a unit of exchange, but it's more conceived as a store of value. So you buy Bitcoin in the hope to get more value equivalent in fiat currency when you will cash back. And if you have a type of money supply like in the Bitcoin, which is basically deflationary, basically you have such kind of a perverse effect. So Bitcoin is not a good good money. It's not a good unit of account. It's not a good exchange of value. It's a good store of value. And it's impossible to have an economy, a large economy, to live on Bitcoin or cryptocurrencies that follow the same monetary rules.
Okay, interesting. All right, in that case, if there's no more questions. All right, thank you, Paolo, so much. Let's give you a warm hand of applause. Thank you for coming to the event. I'm sure you'll be sticking around, right, and
sure.
Talking to people?
If you come to me for any question you may have.
Perfect. Thank you so much.
Thank you. Bye.
All right.
Thank you.